Good morning, everyone. Welcome to today. I hope you can all hear me. I bet I'm loud and clear today. So welcome to yet another day here at Financial Hub. Another day where we get to do analysis and share with you our perspective in the market, how we break down the market, and what we are looking to trade in the market. So starting off, I'll start off with a few pairs that I normally trade. In the meantime, if Ken is able to arrive, he'll cover the rest. But if not, I'll just cover a few pairs and then we'll move on to the next thing. I think the main thing that most people are looking at is the dollar. So I'll start with the dollar index as usual and then move forward to the other pairs. Most of the pairs that I trade are dollar related, so that's why. And if you've noticed, we mainly don't analyze Euro USD. Personally, why I stay away from Euro USD is because that pair is the most liquid pair in the world, and that means many people gravitate to it. So it's quite easy for people to get fooled on that side. I don't want to be part of that statistic, so I rather trade the other pairs that are more comfortable with. Pairs like USD CAD, Aussie dollar, NZD USD, gold, and such pairs. Okay. So starting off, I'll go down to the pairs, analyze the dollar, and then move on to the next thing. So if I share my screen. Starting off sharing my screen, what do we have? So this is dollar index. So let me just make this full screen. Remember, we talked about this on Monday, and I've talked about this extensively about the market first dropping this. This was back in 2018. Market entered into this consolidation phase. This is the weekly chart. So if you're asking, that's the weekly chart. Market was able to break out of this level and up above this support level. Okay, market rallied all the way up, came had that top again, market fell down, entered into that consolidation phase just like what we had over here, and then now market has started moving up. The only difference with this time is that this market broke below a certain trend line that we're watching. So if you're able to zoom out on dollar index 1 week chart, you get to see that there's a certain trend line over here that market was able to break below, and now we're still trading below that level. Unless we get a break above it is when we'll be going back to bullish territory. But as long as we're below this trend line on the long term, I'm quite bearish on the dollar. So okay, so ever since we had this breakout, market has come back up, broken above this support resistance level, and market is sort of retracing back to get this either retest of this trend line before we continue moving back down. So if we go to the daily chart, we had this wedge-like pattern. Okay, we had this wedge-like pattern which market was able to break above. If you remember, a couple of days ago we were talking about either being a false breakout or actual breakout. And what did we get? We got an actual breakout. Market actually broke out the first time, sort of confused people with this shooting star formation, and then market rallied all the way up. So this was just a trap that was around this level, and after that you can see these mariposas that followed, and the market has been gravitating further up. If you go to the 8-hour chart, you can clearly see that channel that's in formation. Okay, so if you look at this 8-hour chart, you can clearly see this pattern that's in formation. So you can see the market had this first touch, second touch, and now we've recently gotten our third touch, which was yesterday. Okay, so when market opened, we had a bit of a rally to the upside, but immediately market started falling back down. If I look at this pattern that I'm watching, so this is more of an expanding triangle. Okay, whatever name you can give it whatever name, but the pattern is still the same pattern. Okay, so you can see this first touch, second touch, third touch. I shared this on the premium group yesterday, and we got this fourth touch over here yesterday, and market has been falling. Note that this was also a 61.8 retracement. So if you can look at my Fibonacci, I have my Fibonacci here, using this as the top, okay, and this as the bottom. Market has retraced all the way back to the 61.8, gotten that rejection, and you can see market had that strong fall yesterday. Okay, so now as we move into London session, mainly the Asian session, we've seen quite some pullback today morning. If I go to the 4-hour chart, so this is the same pattern that we're talking about. So you can see that first touch, second touch, third touch, fourth touch. Market always goes to extreme levels, so always be sure to note that. But as market was going to this extreme level, there's this pattern that was forming at this level. If I do it on the 1-hour chart, you can clearly see that this was a channel, and such pattern is what you're normally looking for. You can see this pattern, we had a wedge-like formation, market broke to the downside. We had this bullish run, market had this sort of ending sort of like a channel like formation up here. So it's a channel within a channel at the top of this boundary. So market had that first touch right here, second touch, third touch to the extreme levels, and later on we started getting that massive drop. We broke below this level, and now market has sort of been retracing back to the 61.8 level, 78.6. So personally, I still expect, if this downward momentum is to be maintained with the 8-hour chart, that trend line level that you've seen, this is the third touch. If market is able to maintain, I still expect this market to continue falling further down. But go back to the 8-hour chart, and unless we get a break above this trend line, okay, above this trend line, then market can go to that extreme level, maybe to the 1 week chart. So the top-down analysis helps you get that perspective of where market is rushing. So you can, push until this level, maybe the 93, before we get that drop. But for now, as long as we're still maintaining around this region, I expect this market to continue falling to the downside. So with that said, what am I looking at? Let me start with gold. I have a gold trade that I took yesterday, okay, which is about 200 pips in profit from where I took it. I'll start on the 1 week chart. Ken has been covering extensively about this. Personally, I've been covering extensively about this. But let's look at the pattern that's in formation over here. So you can see this trend line market had, then we have this inner trend line, okay? So inner trend line, you can see basically, just give me a sec. So continuing on, sorry about that. So you can see this first touch, second touch, third touch, okay? So this third touch was quite crucial, okay, on the 1 week chart, because this level is the level that acted as a strong resistance. Just make this more visible. So at first, it acted as a very, very strong resistance. Market fell all the way down, pushed back up, was able to break above it, and now acted as a very strong support. This was the 1675 level. So this was the actual buy level that market is pushing back to, okay? So you can see it was in line with this third touch, in line with this resistance, now acting as support, and now market has been moving further up. If I go to the 1 day chart, you can see it was in line with the channel-like formation. Market came back to here and in line with the 78.6. So there are a lot of crucial levels around that region that people were paying attention to, and that's why you can see this massive bullish momentum that we got yesterday. Okay, so go to the 4-hour chart. Let me show you the 8-hour first. So 8-hour just helps me get a better perspective of the daily chart. I don't use the 8-hour to get any entries or anything, just helps me get that better perspective. Following this channel-like formation, you can see market has come all the way to this level within this channel-like pattern, and now market has been pushing up. So if I go to the 4-hour chart, top-down analysis, that's basically what we do, what we teach at Financial Hub. We have this same wedge-like pattern down here within this channel-like formation. If I go to the 1-hour chart, you see clearly. So 1-hour chart is the least chart that I normally go to get an entry or anything. You can see we had this wedge-like formation that market came, and we got this bounce off the 78.6. This was actually, we had multiple touches. You can see that first touch, second touch, third touch, fourth touch. And if you remember yesterday in the premium group, we were talking about this market basically having that stop hunt on the Monday, the whole of Monday. We got that stop hunt market because there were many buy levels at this region, because this level at first was sort of like this, okay? So take it back, this is how the market was at first. And if you trade this pair, I'm quite sure a couple of people had entries at this level. I personally had an entry on that, but I came out with a loss of 1%. So at first, I had this sort of pattern, okay? So sort of, it was this wedge-like pattern. This is what happened. We had that breakout. Looking at this retest, I was seeing a good buy opportunity. And what happened after that, if I play my tool, is that the market later on really fell. So when that happened, you have to adjust the trend line, okay? So when that happened, come out of your loss, accept your loss, and if you adjust that trend line, you can just take this a bit down, okay? You can clearly see that this was, and if you extend this, okay, a bit lower, you can clearly see that the market is going to extreme. There are a lot of buy levels. People had a lot of buys at this level, and that's what happened. Playing my bar tool, my replay tool, Now market got a bottom. Once we started breaking above this red zone that I've highlighted over here, this support is when we started getting those entries to the upside. So that's something I'm watching. Market can easily rally back up to 1750, and if that level is broken, we can get to see that push further up. If we get maybe some dollar strength, maybe I can expect market to come get maybe a correction of this push to the upside. So looking at that impulse, a bit of correction around here. Okay, so we can get that correction around here, maybe a sideways movement around here, or we can get channel like formation to the downside before we get that push further up. So that's what I'm watching on gold. Aussie dollar, before I go to the others. Aussie dollar, I'm expecting market at least to push further up. Let me go to the 1 week chart because we want to see long-term perspective, where we're going. So long-term, remember, there's this trend line we're watching, multiple touches up here. Market came all the way to extreme levels, got that touch. We got that shooting star formation, and market has started falling. So long-term, I can still expect this market to continue moving further down, especially if we get some dollar strength. But looking at the dollar index, the way I've analyzed it, I'm seeing quite some dollar weakness coming in, and that can propel this market to move further up, okay? But looking at the chart patterns, what the market is showing us is that there can be a possible move further lower. But if you go to the 1 day chart, what now I'm paying attention to, remember I talked about when we're looking at the direction of the trend, the main thing we want to look at is the formation of higher highs, higher lows. A trend line can be easily broken, but just because a trend line is broken doesn't mean the pattern or the direction of the trend has been changed, okay? So I have this wedge-like formation. So you can see this trend line that I have over here, which was clean, quite broken a few days ago. So you can see this impulse, market tried to bounce off, came and broke it, and now market is sort of dangling around this region. And why I highlighted this red region is because this is the previous higher low. Okay, so when market is moving up, higher highs, higher low, higher high, higher low. So when market is able to break below this level, strongly and close below, then I'll be looking for quite a couple of bearish trades on that one. But before that, market can have this breakout. You can see it's just a clear breakout. We can have maybe a retest of this level for market to come back to get some liquidity. Okay, so some liquidity at this previous resistance level. Okay, look at this level. It was acting as resistance. Okay, market was able to break above, came below, then now it's acting as resistance yet again. So market can get that pullback maybe to this level before we get those further push to the downside. Looking at the 4-hour chart, let me go to the 8-hour first. Looking at the 8-hour chart, you can see this channel like formation, so quite clean, quite clean and precise. And to look at that, you can see the pattern. Market can be having that formation to the upside, and then maybe a push back down looking at this level, okay? But until the formation of the higher highs, higher lows is broken, is when we strongly get that fall to the downside. But now you can see this trend line is broken. Market can get that retracement, maybe to retest this level before we get any push to the downside, okay? So looking at this one, there's a channel like formation over here. Let me show you on the 1-hour chart. Let's pick the 4-hour. So 4-hour, there can be this push. You can see this is what I'm talking about. So just a top-down analysis, lower lows, lower highs, lower lows. There can be another lower high forming at this level. So don't look for shorts maybe at that. If you want to buy this market, you can buy up to this level before market starts falling. Now in that 1-hour chart, I had a wedge-like pattern which was broken. So this can either mean two things, this line that I've drawn here. Either one, this was the actual first touch, second touch. We got this breakout of this level, okay? Breakout, retest, and market can continue rallying back up, at least to this blue highlighted region. Or this can be the actual trend line bounce at this level, okay? Discounting the second bounce, but I don't want to discount this because why did I take this as my bounce? Because once you got this trend line bounce, market went and formed a new lower low, okay? So you can see that formation, lower low, lower high, lower low, lower high, okay? So if I bring this back here, this can be easily a retest. Maybe market is moving back up to this level. If not, if I just put it here, if market is able to respect this trend line, then we'll be remaining below. But if you get that break, then be sure to see market going back to 0.7780 region around that level, okay? Apart from that, looking at Dow Jones. Dow Jones has had a beautiful run to the upside, okay? So looking at the 1 week chart, you can cover this on Monday, and you can see market had that rally to the upside. We've been having this trend line, this is the 1 week chart. Just looking at the trend line formation on this one, let me put that on the full screen. Market has that first touch, second touch, and you can see this trend line is really being respected so far. And if I go to the 1 day chart, you can easily see that this was a clear first touch down here, second touch, and market came and got this third touch over here. There's a time it came, didn't get that perfect touch, but now market is still dangling around this region. So on this pair, be a bit careful because this is wedge-like pattern, so anything can happen on this one. Because at the same time when the Dow Jones was really rallying last week on Friday and Monday, not Monday, last week Friday and Thursday, I mean Monday and Friday last week, when market was rallying to the upside. On the other side, you could easily see the S&P 500 and Nasdaq falling, okay? So they are moving, most of the time they move in tandem with one another in the same direction, but at this time they are quite moving on the opposite, okay? But yesterday we got this double top formation. Look at that daily chart, close, that daily candlestick, sort of a tweezer top, double rejection of this level, and go down to the 8-hour chart. Let's go to the 4-hour chart. You can clearly see that there's quite a good rejection. You can see this first touch up here. I'll just zoom it for you. You can see this first touch. Market came with that strong rally. You can see this strong rally that market came with, got that strong rejection. Market consolidated after the New York session. We got this touch again during the evening session yesterday, and market started falling. So they can, unless market comes and breaks below the 31.650 level and closes below, is when you should be really watching to see the market going down. But before that, market can come respect that level, maybe get, because you can see this is quite a resistance level, then it can act as support. Market can come, get that spike of that level and rally back, maybe even forming new highs to the 32,300 level around that region. So that's what I have on this one. USD card. I love this pair because this pair quite goes in line with quite a lot of things. So if I start on the daily chart, remember we have this channel like formation. So channels. If you notice, I have quite a couple of channels, and they're quite reliable, and they also offer good risk-reward ratio when you're trading them. So market lower lows, lower highs, lower lows. Look at this pattern that is forming over here. This is a wedge-like pattern. So anytime you see market sort of consolidating, try and look for what pattern is forming. And clearly you can see this is a wedge-like pattern. And if I zoom it, maybe get that clear picture of it, you can clearly see that there's this significant level that market is really spiking on the daily chart. So you want to pay attention to that level, and either break to the upside can show a push to the upside. So if the market is able to close above this level, you can easily see a rally to the upside. But if market is able to close below, there's multiple times you're able to see market rejecting a certain level, people start taking a buy to that side, and market goes in the opposite direction. So easily, if market closes below this level, you can see market continuing to fall further down. If I go to the 4-hour chart, so let's take the 8-hour chart. 8-hour, as I said, it just gives me a better explanation on what is happening on the daily chart. So this is quite the same thing. So if I go down the 4-hour chart to see the patterns that are forming, this is what I'm looking at, okay? So I don't want to really fight within this tug of war. There's a tug of war happening over here between the bulls and the bears. So we had this bullish run, okay? So impact, market has entered this correction phase. So what I'm paying attention to is what pattern is forming around this region, and I'm waiting for a break on either side, either the upside or the downside, before I get any certain trade on this one. So you can see this multiple rejection on the lower side and the multiple rejection on the upper side. Better seen on the 1-hour chart. Clearly you can see this level. Market is playing within this region. So at the moment, I'm not really fighting with this one. You can see I'm trying to plot a few patterns that was forming. This one was watching, I think it was yesterday or the day before yesterday, when market was forming this triangular formation, broke to the downside, and quickly got this retracement back up. Especially that the US oil moves in tandem with USD CAD inversely correlated. When we got that, when the oil was falling, you can easily see this pair rallying further up. Okay, so this is what you want to pay attention to. Currently, I don't have any bias on this one. I'm quite open to see whichever direction market is going to go in the next few days. So that's basically what I have. I've talked about Aussie dollar. I don't need to go to NZD USD because it's almost the same analysis of Aussie dollar, just that this one is a bit more clearer on the daily chart. You can easily see that this is a trendline bounce. You can see this first touch, second touch, third touch. You can easily see a rally coming within this one. But just like the Aussie dollar, one-week chart, this one is also quite critical because of this level. So you don't have to be very strongly bullish because of this strong rejection that we got about a week ago. Okay, so that's mainly what I have on this one. I'll leave it there for now, and be sure to cover next more analysis on Friday when we're ending the week. But that's basically what I have. Looking at any questions in the chat room, I don't see any questions, so I think that's clear, and I'm sure everyone has gotten what we're talking about. So that's it. We've done a questionnaire on our Instagram page. So if you go to the Instagram page, if you've not seen it, I've shared the link. You can go and check that out and be able to get everything correct. There's a giveaway we'll be having. So apart from that, I'll see you guys soon. See you on the Friday when we have our next Zoom session. Until then, peace and have a profitable week. May the peeps be with you. See you soon.